Hello everyone, welcome to the very first session of financial modeling. In this session, we are going to discuss about the meaning of financial modeling, how the financial model is look like, and what are the various uses of financial modeling. So, financial modeling is a forecasting tool to know about the future performance of a business. The forecast is to be done with the help of an Excel. Historical performance of the company in the form of income statement, balance sheet, and cash flow statement with supporting schedules will be used to develop a financial model. When we are talking about supporting schedule, it means that is we need to prepare a depreciation information, we need to prepare a machinery information, so that are to be considered as a supporting schedule in financial modeling. To develop a financial model, set of assumptions will be used in order to see the financial effects of the decision. It allows corporates to explore the outcomes under different scenarios, which helps to give the solution of any corporate financial issues and helps to develop the strategies for the future. The best way to develop a financial model is by practicing a lot. It means that if you'd like to become a good financial modeler, then definitely you have to practice a lot. Only then you are able to develop excellent financial model, right? Then the next thing that we need to discuss about financial modeling is that the question is how to develop a financial model. So generally we develop a financial model with Excel spreadsheet, right? With the help of an Excel we are going to develop a financial model, and it is a structured spreadsheet that contains both inputs and outputs. So both inputs and outputs will be there in your Excel spreadsheet. That's why it is to be called as a structured spreadsheet. So this is an example of financial model, how the financial model look like. As you could see over here, that is this model is divided into three parts. The first part, that is about the important content of financial model, like here balance sheet is mentioned, assumptions, then income statement, then there is a balance sheet, right? And then there's a cash flow statement and various supporting schedules. The second part of this financial model is about the historical results. So all the historical results we are going to use to develop a financial model. And here the third section is about the forecasting period, or for the period for which we are going to forecast the income statement or balance sheet or cash flow statement. So with the help of various assumptions, we are going to forecast about the future. So in this way, once you will learn how to develop a financial model, your model will also look like this. Now very important point, that is, first of all we should know the features of financial model. So under this feature, the first very important feature, it's a in advanced thought process, right? And there are lots of variable assumptions on which the financial model is based. It includes the inputs and outputs to project the financial statement. Then there is the next feature of financial model. It's very dynamic in nature. It's not like that is only one type of model is available. There are lots of models are available through which we could forecast in the future, and all the financial model contains various inputs that is linked with formulas and assumptions. So whenever there is a change in the input, it will put impact on the results as well. Next feature of financial model is that is link with various variables. In the financial model, most of the variables are linked with each other. If there is any change in the input assumptions, the linked variable will also be impacted. For example, changing the demand will change in production volume. When the production volume changes, the production cost raw material cost, and other variable expenses will change. So it means that everything is linked in financial model. So if there is change in one variable, one input, so definitely other variables will change automatically. So that's why there is a need to link everything in case of financial model. Next is that is the future prediction. Financial model is to be developed to predict the future, as business is always concerned to formulate strategies for the future. Financial modelers often interested to know what their financial projection will look like down the road. For example, if you continue growing at the same rate, what will your cash flow be in next 5 years? So that answer we could get with the help of financial modeling. Next feature is contains scenarios, or this is also to be considered as in hypothetical outcomes. A scenario and sensitivity analysis will be performed with the help of financial modeling, as it is a forward looking model. For example, what would happen if the cost of material will increase? How much can we discount before we start making a loss? So all these scenarios we could put in our financial model, and we could predict the future with the help of financial model. Now the question is, who is going to use this financial model? So a person who need to do the projection related to revenues, cost, pricing, profitability, operational activities, and project evaluation could use financial modeling technique to make the work easy and appropriately. Basically, financial modeling is a tool for financial modelers like investors of banker, right? So it means that we could project for the future, like for anything. In case of financial modeling, like revenue, we could forecast the revenues, we could forecast the cost, we could forecast the pricing and profitability as well, almost all the operational activities with the help of financial model. Next important point, that is benefits of financial modeling. There are lots of tools are available to analyze the income statement. So what is the benefit of using financial modeling? So here are a few benefits that I have pointed it out. The first is, in accounting, almost all the accounting packages are historical in nature. On the other side, management needs to formulate strategies and to take decision for the future, in which financial modeling will be very helpful. So this is a very important point related to financial modeling. The level of risk associated with a decision can be forecast with the help of financial model. We could easily forecast how much risk is associated with a particular decision. This is an effective way of representing the financial and operational data of the company in front of various stakeholders. Stakeholders might be the customer, might be the owner, might be employees, employer, government, investors, right? It helps to the company to sharpen their strategies and visualize the future in a better way. This helps in managing the cash flows by predicting demand and supply and schedule the production accordingly. So these are some important, another important benefit of financial modeling. It helps to estimate the future economic performance of the company, and also evaluate targets of merger and acquisitions. It helps in analysis of the investment in stock and bonds. So there are various models which we could use to develop a financial model, and it's beneficial not in case of a corporate, but it also helps for the investor to decide where to invest, how to invest. They could predict for the future. So these are the important benefits. In the next session, we will discuss about various process, what is the process and importance of financial modeling. Thank you for today.